Hi, I'm Simon Martin from Technical Connection and here to talk to you for a few minutes about keyperson insurance. During the next few minutes, I'm going to cover the following areas. Number one, what it is. Number two, why you need to know about it. Number three, why your clients may need it. And number four, a basic overview of tax. So let's start with what it is. Quite simply, it's a term assurance owned by a business which protects that business against a loss of profits should they lose a key member of staff to death or serious illness. In many ways, it's quite simple. Just a life assurance owned by the company with no need for a trust to cover the key people within that business. So why do you need to know about it? Why is it important to you? SMEs, small businesses, are very often chronically underinsured, and therefore your business owner clients are likely to be running a potential risk. All of the best financial plans for your business owner clients could be jeopardized by the loss of a key member of staff, either to sickness or to death. And a recent Legal & General survey suggested that nearly half of new businesses and almost 3/4 of sole traders would cease trading within a year if they lost a key person. That's quite a risk. So providing advice in this area is key to taking some of that risk off the table, ensuring that the loss of a key person doesn't derail their financial plan. So why do your clients need it? Why should they consider it? And as I mentioned, SME clients are very often underinsured, and that effectively brings risk to their financial planning. Working with you as their financial planner will ensure they have got a robust financial plan for the future. However, for SME business owners, their financial plan is often very dependent upon the performance of their business. And as they're so reliant on their business, ensuring against the risk of losing a key member of staff is vitally important and a fairly simple hygiene factor to ensure their ongoing success. The more successful their business is, the more likely their financial plan is going to be to come to fruition. So what about the tax? What about the tax of key person insurance? So the tax treatment of both premiums and claims is often not entirely straightforward, and all business owners should be encouraged to seek clarification from their local inspector of taxes to ascertain the actual tax treatment of the specific arrangement that they have set up. However, generally speaking, if the so-called Anderson guidelines or Anderson rules are met, the premiums will be deductible. So this is based on some comments made by Sir John Anderson set out in 1944, believe it or not, and it has three guidelines. There are three guidelines that must be met in order for the tax to be, or the premiums to be tax deductible for the business. So number one, there must be a clear employer-employee relationship. In a scenario where the individual being covered owns more than 5% of the shares, this becomes potentially challenging because it can mean that employee-employer relationship is, or the relationship is greater than just employee-employer, because obviously they're a significant owner of that business. So number two, the cover must be in place to replace lost profits resulting from the loss of service of a key individual within that business. And number three, it must be an annual or short-term policy, generally thought to be 5 years or shorter, although potentially longer terms could be justified as long as they don't exceed the employee's usefulness to the business. So in order to claim the tax relief, really it's got to be, as I said, an employee-employer relationship and focused on the impact of replacing lost profits to that business if that individual, for whatever reason, isn't there. So the tax treatment of the premiums can also impact on the tax treatment of the proceeds. So if the premiums have been treated as a business expense and therefore given corporation tax relief, general rule is the claim from the provider will be a trading receipt and therefore taxable to the business and subject to corporation tax. So tax is complicated, but it's really important to work with the business and their local inspector of taxes to understand what's going to happen here. that's really an overview, a brief overview of key person insurance. For me, it's an important piece of planning for your business owner clients. And there are a variety of articles and bulletins on TechLink should you require any further information. So thanks very much for listening. And as always, if there's anything else you need from us, please do get in touch.